Here we go again. Just a very quick one. This will be brief, very brief. So let's share screen and show you what I'm talking about. That one there. Okay, hopefully you can see, same as earlier, previous video, the indicators that I've got in place. So the stochastic, just the basic standard stochastic that comes with TradingView. Then the TMA RSI divergence indicator, and then the AK MACD. So you can see on here now that I have drawn some fib levels, fib retracement tool. So literally over here, second one down from the top, fib retracement. And then all I've done is draw. So in the previous video, we were observing this move down, not all of it, because I can't remember exactly where we were. I think probably around this sort of level. So that was a nice 100 pips plus down this way from what we were talking about earlier. So this has now created a low at this point here. It's now pushed up that 1:30 spike up. There's normally some sort of news that comes out at 1:30. I haven't even looked at the news today, so I don't know what it was, but didn't matter because I wasn't trading it at the time. So that spiked up. So all I've done is draw the fibs from this low here to this point here, which has created these two, the two orange fib levels here. So waiting for price to come back down into that area and then push up to target 1, target 2, and target 3. And so from that level, so go for the upper one, up to the first target was 54 pips, up to the second, well, pretty much 55. Want to round it up to the target 2 was 75 pretty much, and then up to target 3, 103, 104. So yeah, let's say 103 pips. So that was a nice little result. Again, you know, I've showed that on not the previous video, the previous video, showing using these fib levels to set the trade, wait for price to come back down into this sort of area. So it doesn't always come down to these two orange lines. Sometimes it goes to the 618. So that's the 50, the 382, and then up to the 1, and then there's the 0.272, the 1.272, and then 1.618. So those are my levels there. So literally waiting for price to push up and then retrace and then push up again. And you've got that supported with these elements here. So if you come back to where I'm trying to leave the cursor, so it's on that candle where it came back down to that level, you can see that I'm going to have to leave that there. The TMA RSI divergence is above the floating line. It hasn't quite gone above the mid-level, and the MACD at the bottom is just turning red briefly. So if you wanted to, you could wait until it sort of turned green and then pushed up, and you've got that element there of it pushing up. So yes, you wouldn't necessarily have taken as many pips, but what's the difference there between that point and that point? 7 pips. It's not a huge amount. So I just thought I'd share it with you quickly, just to show you that using these fib levels can actually be quite helpful, both for your entry position and then your potential targets afterwards as well. And this is another example of why I enjoy trading this particular currency pair and why I stick with this pair all the time. Yes, it does have moments where it can be quite flat in its movements and not really move that much. But when it does move, you know, decent move down, decent move up. If you were trading that, as I've said in the previous video, I wasn't trading it this morning, but I took this opportunity and yeah, just thought I'd share that with you. So I have, at that point there, you've got 1, 2, 3. So the stochastic, the green is crossing above the red there. This moving average has turned green. So you've got 3 elements, 4, including the stochastic. So if you weren't really sure and you just wanted to wait for that part, then yeah, you could still have taken, maybe even at that level, be about 50 pips. Oh no, blimey, 75 pips. So that's still not to be sniffed at either. But the other thing that I do as well is I will mark this out for potential entry position. And then I use the trend-based fib extension, which is again over here on the second one down. So fib retracement is the top, trend-based fib extension is the second one down. And going from the same points, let's just pop the magnet on just to make life easier. Same points from there up to there and down to there. That's where I get some of these other levels from as well. So again, 0.272 and the 618 on that, and there we go. That's just been hit as well. So again, another way of saying let's use the fib retracement to get the entry, and then the trend-based fib extension for potential targets as well. If you're not happy with just 100 pips from the original fib retracement, you can use a trend-based fib extension as well, which will give you this slightly higher level here. And just out of curiosity, let's switch back down to the fib retracement. I'm going to draw that from the top down to there. Just curious to see if that is potentially going to, so let's pop back into this level here, this zone here. I don't know that it is, because that was normally on a downward trending, but obviously just recently it's been pushing up quite nicely. So potentially that could be a zone that it could reverse in, but I'm not going to say that confidently because of the way things have been moving recently. So again, that sort of area could be a potential target if we were looking at this as a downward sort of move, but we don't know for definite whether that is a downward move. And I haven't even used the that other indicator that I had posted previously, which was the harmonic something or other, can't remember. So there may well be a harmonic pattern somewhere that's saying, you know, it might create a high up here, I don't know, low to B point D, C, and then D. So it might be a potential reversal area around here. It might not be. It might just carry on pushing up. So I just thought I would share that with you as well. So a couple of fib tools there to get your entry and potential targets, and then also the trend-based fib extension to get additional potential targets should you so wish. Right, that's it. That's all I wanted to share with you. So I told you it'd be short and sweet, unlike the other ones where I just waffle on for days. You know what I'm saying? So, right, catch you on the next one. I hope these help. They might not. If they don't, I'm really sorry. If they do, chuck a like on it. Chuck a comment. I won't bite. All right, see you later.